Canadian dollar. CAD weakened as oil prices declined on growing hopes of a potential US-Iran agreement that could increase global crude oil supplies. Since Canada is one of the world's largest oil exporters, lower oil prices typically reduce export revenues and place downward pressure on the Canadian dollar. Reports suggesting progress toward a US-Iran deal have raised expectations that Iranian oil exports could increase if sanctions are eased. A larger global oil supply could push crude prices lower, reducing one of the Canadian dollar's key sources of support. As a result, investors have become more cautious on the outlook for the currency, despite otherwise stable domestic economic conditions. 2. The Canadian dollar will also be influenced by upcoming economic data and central bank expectations. Strong Canadian inflation, employment, or GDP figures could help offset the impact of weaker oil prices, while continued US dollar strength or further declines in crude oil may keep pressure on the currency. Traders will also monitor the Bank of Canada for any changes in its monetary policy outlook. For Forex traders, the key events to watch are developments in US-Iran negotiations, crude oil price movements, Canadian inflation and employment reports, Bank of Canada policy announcements, US Federal Reserve decisions, and overall market risk sentiment. These factors will determine whether the Canadian dollar recovers or remains under pressure. Stay informed, manage your risk, and follow for more daily Forex market updates.